We are in a very strong rally, and I think we have a great setup here and a great opportunity coming up for a UUUU. That's 4Us, and that's the ETF that represents uranium, the commodity. And what I believe we are in right now is a micro first wave, and we're going to have a wave 2 corrective pullback, and that would be a great buying opportunity. And we're looking at prices that could take us into the $11 to $12 range. And that's based on multiple confluences. The first of which is the fact that our peak in March of 2021, I'm counting as a third wave. And ever since then, we've been in a long sideways correction, which is almost textbook Elliott Wave here. We have a 3, and a 5 wave impulse in the C wave that I'm calling the bottom of the fourth wave. And typically off of a third and a fourth wave, your fifth wave targets anywhere from the 0.382 to the 0.618 extension. But in commodities such as metal or oils or even cryptos, you often see extensions going far beyond that. So the 1.0. The 1.0 here would be around 1139. So there's confluence once again, as I mentioned before, across multiple patterns and multiple Fibonacci extensions here. When we look at the big picture, not sure how many of you guys are uranium buffs, but uranium used to be much pricier back in the 2000s. Ever since the great financial crisis around 2008, and then the years subsequent to that, we've had a multi-year correction that actually resembles that of oil. Oil followed a similar pattern in which we bottomed in March of 2020, along with pretty much every other asset you can think of besides bonds. This was cryptos, equities, metals, you name it. It all crashed here. And ever since then, we've had a very promising rally structure. When I put my drawings back on here in the big picture, this is the daily view for UUUU. We have a 1, 2, 3, 4. And again, we are in the midst of a fifth wave. This fifth wave is projecting a little bit higher than what I mentioned earlier. This is the logarithmic chart, and this is projecting as high as 13, 17, maybe $18. So I'm going to come back to this in a bit. Let's look at the near-term setup here. As I mentioned, we are in the midst of a fifth wave, larger fifth wave. We've hit my target box here, which is give or take a few pennies. I'm expecting a corrective pullback, as I mentioned. So I expect an A, B, C kind of wave to get us into this second purple box here. This is a wave 2. And as printed on the screen, this could be a great buy opportunity, provided that we hold $5.59. Again, $5.59, red line here. We have the makings of a rally that could take us very quickly to the $10 to $11.30 range, the 1.32 to 1.61 extension. And after fourth wave consolidation, our ultimate top based on this small time frame, non-logarithmic projection is looking upwards of 1176 to 1253. We need to correctively pull back somewhere in this box. It may be a shallow retrace, not totally sure. If you're buying UUUU, it's a good place to start accumulating lump sums. If you're trying to play leverage, I would strongly recommend at least waiting until this bottoms and then wait for a 5-wave impulse, which I'll have more videos detailing the steps of for that particular setup in the future. But make sure if you are going leveraged to have a stop set at 559, maybe a little lower, but not much lower than that. You don't want to get killed holding the bag on a call option that expires. I may have more details on the actual call option setup here in the future, but right now I'm just looking at this purely from an analytical perspective as a setup. As I mentioned before, there is a setup here. After the wave 2, we could take off rallying. Overall, we could, timing wise, get this rally done by the end of the year. It's not very clear. I have some channel lines drawn here, and I do want to make this disclaimer. Elliott Waves is all about price targets, and timing is secondary. Sometimes channel lines can give you a very accurate time projection. So that's what I'm doing here. I'm just giving a rough projection. It's not clear when this will happen, but if the third wave does come along, we're looking at maybe early 2022, we could hit the third wave top, possibly blow off into the fifth wave even in Q1 of 2022. So that's the near-term projections that we're looking at here. Long-term, as I mentioned, the exciting news when we switch to the daily logarithmic view, based on the rally structures that we have had, when we look at the 1-2 and we project this out with the Fibonacci extension tool, typically if we hit the 1.618, 2.0 will be the ultimate top. And we came pretty close to 1.618 target on our wave 3. Therefore, 1282 is a potential top there, maybe a little less, maybe the mid $12 range. The other extension that we can use is, of course, the 3-4 pattern. So when I use this Fibonacci extension right here, based on third and the fourth, our fifth wave will typically land in the 0.382, 0.5, or 0.618 extension. And I'm going to leave it at that. Yes, it could in theory go higher than that, but because it's on the logarithmic scale, that's much more realistic. And there is confluence here. Again, that $12 range, there's a strong possibility here. But 0.618, again, a very common target for commodities is sitting at 1777. So if this thing shapes up, we could have some serious upside. I'm actually going to build this little Fibonacci tool, assuming that we've already got a one wave in place, a wave one. And let's presume that we pull back 61.8%, which is typical in this situation, relatively conservative. That projects us out to anywhere from 1473 to 1684. If I raise this, let's say we have more close to a 38% retrace, a little bit shallower, 1668 to $19, something like that. I want to say it's too early to make that call, but there's some serious potential here. One other thing I would like to point out is, as I mentioned, timing is tricky to figure out here, but we have a bit more of a structure to work with here to get a more accurate timing projection. If you draw a channel line from the bottom of the wave 2 to the bottom of the wave 4, and you basically translate that up and make it go through the wave 3, you can get a reasonable expectation or estimation of where the fifth wave will top off. And here, I've got a top around, again, early 2022. That would be for the fifth wave top. Maybe the third wave could top a little sooner than that. Maybe December. Not totally clear. So regardless of how you cut it, great opportunity. I'll keep you guys updated on this. So if you haven't subscribed, please do so below. Now, if we blow through this top and we go a little higher wave 1 is better. It means we have a higher projection for our ultimate wave 5. But ultimately, again, I have 90% as our gain. So this thing could double within a matter of months. And if you're doing leverage plays or options, it could be a very lucrative haul. Thank you for watching and happy trading.